Welcome to SS Finance online presentation on how to write a business plan. The presentation has 3 key objectives. Explain the importance of business planning. Define and describe the components of a business plan and provide access to sample plans and resources that can help you develop a very good business plan. There are 8 topic sections within this presentation. Each section covers a different aspect of business planning. However, woven together they tell a story that will help you understand why planning is important and, most importantly, how to prepare a winning business plan. Next slide. Planning is important.
Suppose you live in New Hampshire and wanted to drive to Texas. Would you use a map? A presentation you would. Starting or running a business without proper planning is like taking a 2,000-mile trip without a map. Planning will help shape your destination and provide the best road to get you there. Planning gives you a blueprint to follow. It is a communications tool for investors, suppliers, employees and others interested in your business. If you don't plan for the success of your business, you will likely fail. It is that simple. Before you begin writing your business plan, consider 4 core questions. 1. What service or product does your business provide and what needs does it fill? 2. Who are the potential customers for your product or service and why will they purchase it from you? 3. How will you reach your potential customers? And 4. Where will you get the financial resources to start your business? Next slide. A good business plan is a compelling storyboard about your business. It explains who you are, why you're in business, what you do, how you do it, where you operate, how you will generate profits, who your customers are, and why your business is important. Next slide. A typical business plan includes the 9 components. Each of these components is explained in detail within this section of the presentation. Review these components carefully. Together, they represent your business plan. Next slide. The first section of your business plan is the table of contents. It lists key sections within the plan. Importantly, it assists the reader in finding specific topics and areas of interest in your plan. It also brings organization and structure to the document. Next slide. Some would argue that the executive summary is the most important section of the business plan. Although it is typically the first section reviewed by a reader, it should be written last, after the details of your plan have been fleshed out. The executive summary should provide an enthusiastic snapshot of your company, explaining who you are, what you do and why. It should be less than 2 pages in length and easy to read. After reviewing this section, the reader should have a good basic understanding about your company, but most importantly, want to learn more about your business. Next slide. The business description and vision component of the plan is pretty basic. It describes the business. In this section, you should include a crisp mission statement, the focused statement about the company's vision, specific business goals and objectives for a prescribed time period, and background information about the company. You should also identify the key principals or owners of the business. Your business goals and objectives should be specific and attainable. Remember, goals that are not specific will probably not be achieved. Specificity regarding the details of your goals and objectives is very important. Next slide. The mission statement is a brief statement about who the company is and what it stands for. Some companies use the mission statement as a marketing slogan. However, the real intent of a mission statement should be to succinctly describe the purpose of the business. For example, Google's mission statement is, organize the world's information and make it universally accessible and useful. Don't just write down a mission statement, think about it, get input from others and carefully develop a statement that is an expression of your business. Next slide. The company's vision statement is about the future. It is a statement that outlines what a company wants to be. Simply put, the company's vision statement should be a memorable and engaging expression of hope and inspiration. It should guide the mission and business plan of the company. A business without a vision is a company that is focused on the past. Next slide. Defining your market is an important part of the business plan. Let's face it, before you can sell something, you have to know who might buy it. The first step in defining your market should be to describe the industry you operate in, as well as the potential or prospects for your business within that industry. For instance, if you are a retail store selling bicycles, describe the general outlook for bicycle sales, as well as your potential for capturing a growing segment of the bicycle market. The second step should be to describe your customers' needs, including information about the degree to which those needs are or are not currently being met. Again, if you are selling bicycles, explain why customers will buy your products. Specifically, what needs are you satisfying with your products? Next slide. The third step in this section of your plan is to identify your target market and profile your customers. You can do this by answering several questions. Who are your current or prospective customers? What do they buy and why? And what market segments or groups are more likely to buy your products? The market segment or targeted group of customers is a grouping of people sharing one or more characteristics that cause them to have similar product needs. Next slide. This component of the business plan is the easiest to complete. However, don't let the simplicity fool you. In this section you will identify and describe all of the products and services your business sells or provides. You should also explain how the items you sell are priced. In addition, and perhaps most importantly, this section should explain how your products and services are competitive. The real value this section brings to the plan is providing the reader with a crystal clear understanding of why you are in business, what you sell, and how you compete. Next slide. The organization and management section of the plan is pretty straightforward. The first part of this section should describe how the company is organized. Specifically, it should explain the legal form of ownership. That is, are you organized as a proprietorship, partnership, or corporation, and why? It should also describe the leadership of your company and include an organization chart, if you have one. Next slide. Earlier in this presentation we talked about defining the market. In this component of the business plan, marketing and sales strategy, we will discuss reaching customers. Marketing is defined as the activities associated with researching prospective customers and selling products and services. In simple terms, marketing activities and strategies result in making products available that satisfy customers while making profits for the companies that offer those products. Next slide. A good marketing strategy identifies customer groups in which a business can better serve than its competitors. It also tailors product offerings, prices, distribution, promotional efforts, and services toward those identified segments. Ideally, the strategy will address unmet customer needs that offer adequate potential profitability. A good strategy helps a business focus on the target markets it can serve best. Central to any successful marketing strategy is an understanding of your customers and their needs. The ability to satisfy your customers' needs better than your competitors are able to can help you build customer loyalty and increase sales. Next slide. A successful marketing strategy will typically mix the 4 Ps: price, promotion, products, and place, to reflect the wants and desires of consumers in the target market. Remember, trying to convince people to buy something they don't want is extremely expensive and seldom successful. A good marketing strategy will be based on solid research, formal and informal, to determine what customers want and what they will pay for. Next slide. The financial management component of the plan should include financial statements and forecasts for the business. This important section will explain your revenue projections, how much money you have and need, and when and how the business expects to make a profit. It will also reveal what your marketing and operational processes and plans will cost. Many people are intimidated by financial statements, but you shouldn't be. Next slide. The balance sheet represents a basic accounting equation: assets minus liabilities equals net worth. A balance sheet is made up of assets, items of value, liabilities, debts, and net worth, equity, or the difference between the company's assets and liabilities. The balance sheet provides a measure of a business's value at a particular point in time.
It is considered a snapshot in time. Next slide. The income statement is a measure of how a business has performed over a specific period of time, usually 6 months or 1 year. The income statement is also called a profit and loss statement or an income and expense statement. Next slide. The cash flow statement is used to monitor and project incoming and outgoing cash, typically on a monthly basis. It helps you determine how much cash your business has on hand at any point in time. The cash flow statement is a valuable tool to monitor and project the financial performance of your company. Next slide. The last component of your plan is the appendix. This section should help define your business and highlight your accomplishments by including brochures, resumes, pictures, and other important information. Use this section to add color and depth to your plan. Thank you for your time today. Please visit ssfinance.com.o for more information, or investormortgage.com.o.